What's up, everyone? Just want to hop on with another video and talk about the importance of zooming out when you are day trading. Okay, and that's kind of the emphasis of this video. Truly, the emphasis of zooming out, looking at multiple time frames, using a higher time frame picture for your lower time frame trade. Okay, that's exactly what I want to do today. And let's get into it. All right. So again, going over a trade I took today, August the 15th on ES. Okay. ES, which is a SP 500 futures. Okay. Again, just a simple short trade. I was able to make about a little under 500 bucks. Again, very easy trade, easy setup. And again, just something that I do every single day is, again, be transparent as possible with my trades so people can learn from them as we go through it. Okay, and right here, my plan for the day. Again, I had a bullish or bearish bias that I have every single day. Is either, hey, if we get inside a balance, it's going to play the rotation up, or hey, if we decide to reject the supply that's stuck around VAL, then I would elect to get in short again and target these lows. Again, played something very similar to that. Didn't target quite that low. Could have, right? But again, based off my entry and everything, it was a perfect target for at least a 1-to-1 R trade. Getting in at this trade again, I posted my pre-market plan around 8 a.m. Central Time today. And one thing that I forgot to post in my pre-market plan was what I later found in some analysis once the market had opened. Okay, so again, this this goes into the importance of trading using multiple time frames and using that higher time frame picture for your lower time frame trade. Okay, again, I cannot stress the importance enough. Okay, so one thing I do want you to notice is while yes, we do have a 30-minute supply here where I have this drawn, and here where I have this drawn. Okay, one thing that I just got to mention on my pre-market plan was the fact that there was a 50% retracement from a break of structure from the move that lined up with the supply zone. Again, you cannot see it really on the 30-minute because of how the market moved. But again, this is just the importance of using multiple time frames and using all the tools that you have inside your charting platform. So again, we start this fib here from the start of the move to the bottom of the move. Sorry. Yep, that's right. So starting to move to the bottom of the move. Okay, again, while this price action did occur pre-market, it did line up perfectly with what? Right? It lined up perfectly with this newly formed 30-minute supply zone and that 50% retracement. Again, what does that 50% retracement signify? It signifies the possibility that this high right here could become a strong high. Okay, in order for it to become a strong high, we do have to take out these lows. However, my trade was playing the probability that this 50% retrace was going to, in fact, hold. And I was able to take that trade because of that. But that was just one confirmation on this trade that allowed me to enter. Okay, so again, having that, and I'll keep that on the chart for the rest of this video. So having this 50% retrace, again, just a little fib tool there on our 15-minute allowed me to not only identify that, hey, this supply zone is going to be an important area, but as we open, again, around 8 o'clock prior to open, we rip up, right? And I'm thinking, okay, maybe today we just continue to rip higher and we play my bull plan. Like, again, I was trying to think in that pre-market. Okay, but as soon as we opened, I want to just point out something. Okay, just again using multiple confirmations for all my trades. Okay, again, the first thing we do right at open, right at this candle, right at 8:30 Central, again 9:30 Eastern, we rip right into supply. Right, again, huge volume spike coming into supply, and again, all the liquidity that was formed here in pre-market and after hours, again, it's touched. We're going to liquidity grab after liquidity grab. We grab it 4 or 5 times, right? All these increases in volume and the inability to break through supply and come into balance. Again, that just told me, okay, very good chance we're going to see some new lows today. So in order to get an entry, right, I needed some type of confirmation on that lower time frame, right? I needed some type of price action in favor for shorts, right? So as soon as we came down and took out these lows, Again, I knew right away, okay, if I can get some sort of pullback here, even if it's little, and I have a good solid risk reward, I'm going to take this trade every single day because again, with a supply, the supply zone on a higher time frame and the fib 50% retrace signifying the possibility of this becoming a strong high being there just made that supply zone that much stronger, giving me multiple confluences and confirmations to enter this trade. So once we get the price action confirmation of the break in structure, again, while it's not incredibly strong, right? This is not maybe a significant low, but with the other confirmations, we do get that. Once we get that break, right, we're able to come down and we are able to pull back. And I was able to catch it right here on this wick again, like literally right there where my entry is. And I was able to ride this down. And again, talking targets, I always target liquidity above the opposing demand zone, typically on a higher time frame, but sometimes I'll go down to like a 15-minute. This was a 30-minute demand zone that I was targeting here from this move, essentially. Or I mean, it was actually from previous price action back dating here since Monday. Again, I'm on the 1-minute chart, but it's previous price action dating from Monday. And even though, again, this demand zone wasn't fresh, so technically I could have targeted lower like I did in my pre-market plan. Again, I had a good solid risk to reward, and I was able to target the liquidity right there. And again, one thing that I always emphasize, especially in one-on-one coaching, is that yes, right? Like I very well could have targeted down here and had a good solid trade, right? Had a good solid trade. But when I targeted here, a very realistic risk to reward, I was able to get out literally in 7 minutes, stress free, right? I literally, this trade was literally a 7-minute trade, right? Literally 7 minutes, and I made $487, right? 7 minutes, okay. But the reason that I'm not mad that I didn't target here or here is because of what happened when we did react at this liquidity, right? As soon as we come down and grab this liquidity that I have drawn here, what do? Right? We shoot up. Okay, you know what happens with emotions if this trade isn't automated? You know what 95% of traders will do in this scenario? They close their trade. They close their trade 95% of traders will close their trade right there because their target was almost hit, but it wasn't. And then emotions take over, and then the big move happens, and they don't hit their profit target. Again, I've seen it over and over and over again. I cannot stress the importance of setting realistic targets. It's going to be the most important thing you do in trading. But the main goal of this video is to show the importance of using multiple time frames and especially zooming out to find confirmations for a lower time frame trade. Okay. Again, I can't stress that enough. I hope you enjoyed this video. Again, I have a link to on-demand trading down below. I'm going to post my Twitter in there as well. Feel free to like, subscribe, comment on this video, and follow me on Twitter as well. Hope you enjoy. See you next time. Peace.